Hi students, welcome to Sunil's tutorial. I'm Sunil Milwani and today we'll be doing this chapter called as foreign exchange. We are going to do question number 21 in the books of Messrs FEMA Limited. We're doing question number 21 in the books of FEMA Limited journal. Now guys, in this sum it is very necessary for you to read the dates very carefully and initially arrange them in chronological order. Right? Now let's see this. They are saying that from the following details of foreign exchange transaction of Messrs FEMA Limited for year ending on 31st March 2005, prepare a journal and also foreign exchange fluctuation account. On 15th April 2004, goods worth 5,000 were purchased from Sea of China. Right? So my first date, what we are going to do initially is arrange all the dates in chronological order. So I have a 15th April, right? 15th April is Sea of China. This is my working note. I'm first arranging all the dates in chronological order. Sea of China. Okay. Then the rate of exchange, the payment being on 30th May. I need a payment on 30th May. Is again Sea of China. Right. Next, you have on 12th June, F of France, and whose payment is received on 20th June and on 30th June. 20th June and 30th June, you have F of France. You have F of France. Okay. Next, on 10th July, machinery was purchased. 10th July. 10th July, you have G of Germany. Okay. Then on the payment for which was on 28th July. Okay. Again you have G of Germany. Next, on 28th Jan, you have K of Korea. K of Korea. Right? And then next you have on 20th April. So that's next year. Now on 20th May, you have Sea of Canada. 28th May. You have Sea of Canada. Right? The payment for which was received on 28th June. 28th June, you have Sea of Canada. Right? Then you have on 28th August. On 28th August, again you have Sea of Canada. So those are the three transactions. On 1st October, you have J of Japan. Okay, J of Japan. Then you have on 15th October, and you also have on 28th December. You have J of Japan between these three dates only, and then you have on 2nd Jan. 2nd Jan is also going to be between this. 2nd Jan is going to be before 28th Jan. And then you have 20th March and 20th May. So now that I know my dates, I can start with my sum. So the first transaction should be on 15th April. Right? 15th April. 15th April 2004. They are saying that goods of $5,000 were purchased from Sea of China. Right? Purchase. Debit what comes in. Goods are coming in. Purchase account debit to Sea of China. Right? You have purchased goods of $5,000. I hope you all have a calculator to give me the figures. Being goods purchased. You are purchasing goods of $5,000 when the dollar rate is given to you as 48.6. Someone give me that figure.
2,43,000.
2,43,000. 2,43,000. Then you have now. Then you have Sea of Canada. Sea of Canada is on 28th May. 28th May. Right, on 28th May they are saying that exported goods to Sea of Canada of 1,20,000 US dollars. Exported, debit the receiver. Sea of Canada is the receiver to sales, being goods sold. Right, you have exported goods of how much? $1,20,000. You have exported goods of $1,20,000 when the dollar rate is 47.35.
56 lakhs 82,000.
56 lakh 82,000. 56 lakh 82,000. Right? Then again you have Sea of China on 30th May. Now payment is made on 30th May when the rate is so much. 30th May. You are paying. Debit what comes in, credit what goes out. Money is going out, debit the receiver. Now observe very carefully guys. Sea of China account debit, leave a line to bank. Sea of China account debit to bank. Now Sea of China guys, if you please see this figure, Sea of China figure was 2,43,000. So I'm going to keep Sea of China as 2,43,000. I had purchased goods of $5,000. Now on 30th May the dollar rate is 48.9. Someone tell me how much is this?
2,44,500.
2,44,500. The difference is called as exchange difference. Exchange difference goes on the smaller side. Here the smaller side is the debit side. So this is going to be exchange difference account debit. Someone please give me the difference.
1,500.
Being payment made. Right? That was 30th May. After 30th May you have 12th June, which is F of France. On 12th June, advance amount of 1,000 to F of France. 12th June, you send an advance to F of France. Debit the receiver. F of France is the receiver. F of France account debit to money is going out, debit what comes in, credit what goes out, being advance paid. You have paid an advance of $1,000 and the dollar rate on 12th June is 48.5. So that is 48,500. Right? That was 12th June. After 12th June you have 20th June. On 20th June imported goods of $10,000 from F of France. So on 20th June you imported goods. Debit what comes in? Purchase account debit. Leave a line to F of France. Right? You have purchased goods of $10,000 and the dollar rate is 48. So $10,000 and the dollar rate is 48. So that's going to be 4,80,000. Right? Guys, now when I paid an advance to you, I paid an advance at the rate of 48.5. When the actual delivery was to be received, it was 48. That means I paid 50 paisa extra per dollar. If I paid 50 paisa extra, that means that is a loss for me. Debit expenses and losses. So I am incurring a loss of 50 paisa per dollar. Since it is loss, I am writing this on the debit side. So this is going to be exchange difference account debit. 50 paisa per dollar on $1,000 because I have given you a advance of only $1,000, 500 rupees. So F of France will be 48 lakh.
4,80,500.
4,80,500. 4,80,500 being goods imported. Right? After 20th June you have 28th June where you have Sea of Canada. On 28th June payment was received from Sea of Canada $40,000. You have received a payment. Debit what comes in, money is coming in. 28th June, money is coming in. bank account debit, leave a line to Sea of Canada. Right? Now, when you had exported to Canada, you had exported at the rate of 47.5. 35. You had exported at a rate of 47.35, $40,000, and then on the date of payment, the dollar rate has now become 47.6, $40,000. Someone please give me this figure. 47.6 into 40,000.
19 lakh 4,000.
19 lakh 4,000. Okay, and 47.35 into 40,000.
18 lakh 94,000.
This is going to be two exchange difference. Someone get me the difference, please.
10,000.
Being payment received. Right? After 28th June, you have 30th June, where again you have F of France. Now on 30th June, payment was made to F of France $9,000. Payment was made, money is going out, debit the receiver. F of France account debit, leave a line to bank. I'm paying $9,000. The date of my import, on the date of import, the dollar rate was 48. The date on which I imported goods from F of France. On the date of payment, the dollar rate is 47.9. 9,000 into 47.9. This is how much?
4 lakh 32.
4,32,000. And this is
4 lakh 31,100.
4,31,100. The difference is going to be two exchange difference.
900.
900 being payment made. Right? That was 30th June. After 30th June, you have 10th July, G of Germany. On 10th July, machinery purchased from G of Germany of $50,000. 10th July. Debit what comes in? Machinery account debit to debit the receiver, credit the giver. G of Germany. Right? You have purchased machinery of $50,000 and the dollar rate is 46.8. $50,000 and the dollar rate is 48.6.
23 lakh 40,000.
23 lakh 40,000. 23 lakh 40,000 being machinery imported. Right? That was 10th July. After 10th July, the next entry that you have is on 28th July. On 28th July, payment was made to G of Germany. 28th July, payment was made to G of Germany. Debit the receiver. G of Germany account debit. Leave a line to bank. Right? Now, G of Germany we found out is 23 lakh $40,000. Sorry, 40,000 rupees. You are making a payment for $50,000 and the dollar rate on 28th July is 47.2. Someone tell me how much is this?
23 lakh 60,000.
23 lakh 60,000. Right, so you will have exchange difference on the debit side here. Exchange difference account debit 20,000. Right, being payment made. Right, after 28th July, you have 28th August, which is Sea of Canada. Right, on 28th August, payment was received from Sea of Canada, $80,000. Payment received. Right, 28th August. Payment received. Money is coming in bank account debit. Leave a line to Sea of Canada. Right, $80,000 he is paying you. right? The date of import dollar rate was 47.35, and on the date of payment dollar rate was 47. So this is going to be 80,000 into 47. Someone get me the figures, please.
37 lakh 60,000.
37 lakh 60,000, and this is
37 lakh 37 lakhs 88,000.
37 lakh 88,000. Right? The difference is going to be called as exchange difference.
28,000.
28,000. Being payment received. Right? That is 28th August. After 28th August, you have 1st October. Right? 1st October. On 1st October, advance received from J of Japan $10,000. 1st October, advance money is coming in. Bank account debit to J of Japan. Debit the receiver, credit the giver. He is giving you an advance of $10,000, and the dollar rate on 1st October is 46. So he is giving you an advance of 4,60,000. 4,60,000 being advance received. That was 1st October. After 1st October, you have all the entries of October. On 15th October, exported goods of $30,000 to J of Japan. 15th October, exported. Debit the receiver. J of Japan account debit. Leave a line to sales. Now you have exported goods of J of Japan. You have exported goods of $30,000, and the dollar rate is $30,000. The dollar rate is 46.25. Someone tell me how much is this?
13,87,500.
Right? Now guys, when I received an advance, I received an advance at the rate of 46 rupees. When I am actually making the delivery, the dollar rate has become 46.25. I have received 25 paisa less in my advance. Less means that is a loss. Debit expenses and losses. So it will be on the debit side. This is going to be exchange difference account debit. I am incurring a loss of 25 paisa on $10,000. Right? So someone please do that. 0.25 into 10,000.
2,500.
Subtract this please. So this will be 13,85,000. Being goods sold. Right? That was 15th October. Next, on 15th October, you have this. On 28th December, payment received from J of Japan $20,000. 28th December, you receive payment, money is coming in, bank account debit. Leave a line to J of Japan. Right? Now, you had sold to J of Japan at the rate of, they are giving you a payment of $20,000, you had sold to them at 46.25. And on the date of payment, the rate has become, same. It has remained the same, 46.25. So there is going to be no need for this line in between. Someone please do $20,000 into 46.25.
9,25,000.
9,25,000. 9,25,000. And being payment received. Right? Then you have 28th December, then you have 2nd Jan. Exported goods to S of Sri Lanka $40,000, the dollar rate being 45.4. On 2nd Jan, this is 2005. 2nd Jan, exported, debit the receiver, S of Sri Lanka, debit to sales. You exported goods of $40,000. You exported goods of $40,000 at the rate of 45 point, no, S of Sri Lanka, 45.4. Someone give me this amount, please.
18 lakh 16,000.
18 lakh 16,000. 18 lakh 16,000 being goods sold. Right? After 2nd Jan, you have 28th Jan. 28th Jan, goods purchased from K of Korea of $15,000. 28th Jan. Purchase. Right? Debit what comes in? Purchase account debit to K of Korea. Right? You have purchased goods of $15,000 when the dollar rate is 47.3. $15,000, dollar rate is 47.3. Someone tell me this.
7 lakh 9,500.
7,09,500 being goods purchased. Right? Okay. Now, after 28th Jan, you have 20th March. Right? On 20th March, $20,000 was received from S of Sri Lanka. Money is coming in. Bank account debit. Leave a line to S of Sri Lanka. Right? You are receiving $20,000. You had sold to S of Sri Lanka at 45.4. On the date of payment, the rate has become, S of Sri Lanka, the rate has become 46.3. Right? Someone do $20,000 into 45.4 and 46.3.
45.4 is 9 lakh 8,000. 46.3 is 9 lakh 26,000.
The difference will be called as
18,000.
exchange difference. How much is the difference?
18,000.
18,000. Being payment received. Right? Now there are only two people from whom I have not received payment till the end of the year. Right? One, see, I have received entire payment from C of China. I have received from F of France. I have received from G of Germany. The only person who not paid me as on 31st March is K of Korea. I have to make a payment to K of Korea. Right? So let's do the rate change entry. 31st March. S of Sri Lanka also, right? 31st March. Now see, when I purchased from K of Korea, I purchased at 47.30. Right? On 31st March, the rate became 45.60. I had purchased at 47. Now my rate has become 45. That means I have to pay him less. Had I made payment to him on that date, I would have had to pay him 47.30. Today I have to pay him 45.60. I have to pay him less. That means that's a profit for me. Profit means exchange difference should be on the credit side. Debit expenses and losses, credit incomes and gains. It's a profit, therefore I'll write on the credit side. So I'll write K of Korea account debit. To exchange difference. Right? Now how much am I making a profit of? See, 47.30 minus 45.6. Someone please do that.
1.7.
1.7 on the payment that I haven't made. How much payment I haven't made? I haven't made a payment of $15,000 into 15,000.
25,500.
25,500. I haven't made a payment of 25,500. On that, I haven't made a payment of $15,000. On that, I'm making this profit. This is called as the rate change entry, which is to be done at the end of the year, being rate change. Right? Now this is to be done for only those entries on which balance is due. Now balance is also due on S of Sri Lanka. Now guys, when I sold to S of Sri Lanka, the dollar rate was 45.4. I should have received 45 rupees 40 paisa. On 31st March, the dollar rate became 45.60. Instead of 45 rupees 40 paisa, now I will receive 45 rupees 60 paisa. I am making a profit of 20 paisa per dollar. Now, I will make that profit on the payment that he has yet not made. He has not made a payment of $20,000. So on that $20,000, I will make a profit of 20 paisa per dollar. Profit means exchange difference should be on the credit side. So this will be 31st March. S of Sri Lanka account debit to exchange difference 20 paisa per dollar or $20,000.
4,000.
4,000 rupees being rate changed. Now on 31st March, I have to now transfer all my exchange difference to P&L. Now keep your calci ready guys. Now let's see this. You have to go through all your journal entries right from the beginning. Wherever you have exchange difference. You have incurred a loss of 15,000. So on the calci put that as 15,000 negative. Right? Then you have loss means it is going to be negative, okay? Then you have made a loss of 500 rupees. So 500 negative. So 15,500 negative you are getting on the calci, okay? Then you have made a profit of 10,000 plus 10,000, right? Now there is no need to put the negative sign now, okay? Plus 900 minus 20,000. There is no need to put the minus sign now.
It's a 20,000 profit.
No, it's a loss, but I already told you the minus sign. See, we'll do it again. See. It's only in the first entry that you need to put a minus sign. We'll start again guys. See this. This is going to be 15,000 negative. Just put, that is the only number where you need to put the negative sign. Loss of 15,000. Then you do press minus key 500. Now you don't need to put the minus sign. Okay. Now just go on doing this way. Plus 10,000 plus 900 minus 20,000 minus 28,000 minus 2,500 plus 18,000 plus 25,500 plus 4,000. How much is the net balance?
11,200.
No.
Negative.
Wait, we'll do one thing. We'll make a ledger for this. Leave space for one journal entry and let's make a ledger for exchange difference account. Exchange difference account. Right? Let's see this. Look at this. You have exchange difference guys here on the debit side. So you will make the entry on the debit side. You will write to bank 15,000. This shouldn't be 15,000, this should be 1,500. Just check this calculation guys. This shouldn't be 15,000. That's the reason I think the figure was wrong.
No, so that is 1,500 only.
Okay, that's 1,500. Okay, no wonder if you are getting a wrong answer. Do the calculation again now. Right?
Yeah.
This is going to be 1,500 negative.
Wait, I do it.
Okay. Then 500 negative minus 500 that is. Then you have plus 10,000 plus 900 minus 20,000 minus 28,000. Then you have minus 2,500 plus 18,000 plus 25,500 plus 4,000.
5,900.
Negative.
No, positive.
You're getting a positive balance of 5,900. Okay. Positive balance. That means I'm making a profit.
Profit.
Profit means P&L should be on the credit side. profit, debit expenses and losses, credit incomes and gains. That means profit means P&L should be on the credit side. So this will be exchange difference account debit to P&L. How much is the amount you are saying?
5,900.
5,900 being profit transfer. Now that you have all the journal entries, you should be able to make the ledger on your own. I will leave the ledger for you all to make on your own. We will stop this here for the day. Thank you very much.